I think we discussed a long time ago already that 30 would be the kind of a break-even / breathing point in that sense where we can say, okay, we have reached enough scale to kind of take a breather from active growth. But we have a few good ones in pipeline. Hopefully I'll get to sign one of those new loan originators this week, maybe even the both two. You never say never, but we do have one now from UK, which is supposed to go signing this week. It's litigation funding with actually an insurance backing the NPLs. So it's quite a different concept. But it seems to be quite interesting. Book is very good quality. And essentially, they borrow money to law firms for litigation costs. I don't have an idea of exiting, as you know, and if an exit would happen, then it would probably be with all of the shareholders together, right? So I don't have there's not even discussions ongoing of me selling to anyone. So that's clear. Again, all of those LOs that are utilizing it understand that if you start playing around with it, this should be like a last moment thing. I mean, we were very clear with them also that, you can start playing around with them, but the investors will not probably look at it very positively. It's essentially saying that you have cash flow problems if you don't, if you don't use it. And that's, if that's the message you want to send, then feel free.
Welcome back to episode number 9 of the Income Insights podcast. I'm your host, Denny Neithardt, and alongside me once again, the one and only Income founder, Kimmo Ritkyn. Kimmo, good to see you after the holiday break that we had. How was your summer break so far? What have you been up to?
Yeah, thanks, Denny. Nice to be here again. It's a short break, but time goes fast. Not much. I mean, pretty much I've been focusing on getting health things in order. I have some issues with my back. We've discussed about gym and everything. So I've had a bit of a break from there and doing more mobility and stuff like that. And then and as we know, the summer season is also quite of a slow season in terms of P2P. So I think we've done pretty okay despite that. So June, July are usually quite dead. But we managed to keep up growth. Some delays, of course, with these new loan originators that we're hunting from around the world, but hopefully almost there. So we've been working throughout the summer, but more of a shift to personal health and that kind of things.
All right. Well, already excellent cues that we can pick up now. Obviously, today, the first episode after the summer break, so I thought we keep it light. We just pick up on a couple topics, a couple of events that happened in recent weeks. Maybe we start off by just trying to see the general look, the status quo where income is at the moment. I reviewed it this morning again. Assets under management, it grew from 8.7 million to now 15.7 million in the past 6 months. So that's quite an impressive growth so far that we can see this year. Continuous supply on the primary market, even without new lenders. So how would you personally assess the current situation? Are you satisfied with the growth that is happening thus far with income this year?
Yeah, I think for 15.8, I think was today's number when I checked it in the morning. So it grows quite nicely. I think very soon we'll reach 16 million. If I think we discussed a long time ago already that 30 would be the kind of a break-even / breathing point in that sense where we can say, okay, we have reached enough scale to kind of take a breather from active growth. So 16, I think still this year, depending a little bit now, we have a few good ones hopefully coming. As I said, the summer break slows down everything, but we have a few good ones in pipeline. Hopefully I'll get to sign one of those new loan originators this week, maybe even the both two. So depending a little bit of those, we might have an institutional investor jumping in as well with one of those guys. So that might give us a nice boost on the AUM or loans invested in. Overall, I think satisfied. We're growing consistently. I mean, we managed to finish our annual report also. So, we doubled revenue there. already in 22 to 23. So yeah, I mean, I think it's good. I think it's just has taken longer than we expected. So if this was the second year of operation, I'd be thrilled. But considering we've been at it for a bit longer, then I think the result is okay, and the direction is correct.
Actually, it was a bit surprising because new lender onboardings have been pending for quite some time now, and we can still witness there's like the existing lenders can contribute enough volume, at least at this point in time. Maybe just a very quick question: where do you see like the ceiling right now with the current lenders that you have in place that are consistently uploading assets on the platform? Where do you feel like, okay, this might not satisfy the demand anymore?
Well, I think it's this is sort of a platform problem. Always was and always will be, I guess, until you reach the scale of something like Mintos or Peerberry, right? Is that you focus on getting investors, but you don't have enough assets to invest in. Again, then you shift your focus to the other side, and then you'll end up with less investors. So now clearly we are at a place where we think that there needs to be a few more loan originators for sure, and I think investors will appreciate it. But then again, after that, we'll need to start looking at how do we actively grow the investor base. What we've done quite nicely now is we've actually focused a little bit more on the higher ticket investors, and we have some initiatives there. When we started, we were all about the volume, right? So we thought that, okay, if we can get 2,000, 3,000, whatever investors, but yeah, I mean, it makes more sense to try to figure out how to get the average investment up a little bit more, and maybe even to avoid this €50, €100. I mean, everybody's welcome, but considering the acquisition cost and others, that just if there's not enough value behind it, then it doesn't make sense, right? So, but yeah, it's a balancing act all the time, and I don't expect this to change. We need to shift from one focus to another and back, depending on the situation.
But just again, I know this is can be fluctuating, but just to get back to my question, like you see the ceiling with current lending companies, they can contribute a growth of, let's say, 20 million assets under management, 25. So just a vague answer where you see like when the necessities definitely will kick in to have new lenders.
Okay, now I get you. Okay, yeah, I mean, I think the current ones will easily be able to accommodate another 4 or 5 million. So I don't think there's a ceiling in that sense. And I think now the ones that we are about to onboard, and fingers crossed it'll happen, and nothing gets lost in the last moments. But that'll give us another 5 million for sure of ceiling. So I think around maybe even with today's lows, maybe even the 30 is reachable. Depending a little bit on how they're doing, and obviously we want to scale with them. It's better to have €5 million LOs and have a good cooperation with them instead of having multiple 1 million ones. And at the same time, I would be better not to have any huge ones like 50 million ones unless you have several of them. So. But yeah, I don't think there's a ceiling there. I think the bigger question to us is the investor side, right? So how do we attract more high ticket investors in?
Yeah, but at the same time, to fuel growth at one point, not just the necessity of new capital, but also new lending companies, as you said already. I remember early in June when I came to Tallinn and we had this discussion on site also with Lavrenti. He mentioned there was already 5 signed collaboration agreements with lenders, which indicates at least an advanced commitment from lender side to be willing to collaborate with Income. What happened throughout the last weeks, months that so far no official onboarding has happened?
Okay, well, I mean, the way the process goes, right? We'll take the commercial offer is sent to them, and then that's a kind of an overall document saying, okay, this is the pricing, this is what we think the advance rate of the junior share could be. They accepted. That's the point where we start putting the effort in with the due diligence, which is done with all of them. So due diligence mainly looking at the loan book, right? And then of course the commercial framework agreement, assignment agreement, and potentially a lot of work on the structure, right? So I'll give you an example, and then maybe it's we never say never, but we do have one now from UK, which is supposed to go signing this week. It's litigation funding. It's a super interesting one with actually an insurance backing the NPLs. So it's quite a different concept, but it seems to be quite interesting. Book is very good quality, and essentially, they borrow money to law firms for litigation costs. So with those guys, for example, we needed to rethink the structure a little bit just to make sure it works with UK law as well as as Estonian law. So this was something we didn't really expect. So that took a lot more time, right? So that's one thing. I mean, that's just how it is. You think something is easy, and then a lot of work goes behind it. But I'm still confident we'll get those 2-3 onboarded now, with 2 totally new names at least. If not this week, then the next one.
When we speak off camera, it's always like certain information have to be kept confidential. Now you teased already, let's say, a new borrower country, also the kind of scope that they're operating in. What details are you willing to share about the other lenders that you target?
Well, the other ones, it's not really the confidentiality. I mean, I could blurt out all the names here, but then if something happens, and if we haven't signed the framework agreement, right? So I always try to keep it that I only communicate what is sure. And so if something happens, then people go, well, you said it, they're coming, and why didn't they come, right? So if I give a name, then I would rather give it when it's actually a signed agreement that these guys are here. Not to give like false hope or false information to people. But on the other ones, I mean, the one that we have is a Spanish one coming up. They've been on other platforms as well, so maybe people can have their guesses. The book seems to be pretty good. Again, final stages of framework agreement. We want to get them done. We have car rent, obviously. The guys who are doing the car leasings. Or not leasing, but car rentals. Their Lithuanian business will join us. I mean, that we can already say. We have an interesting one with Hobby, right? So they're listing loans still consistently. Book is good, actually, profitable numbers. We're quite happy with the cooperation, and they express their willingness to list also non-performing loans, right? So that was something we worked over the summer. We haven't listed the product yet, and that's a question mark, but what we did manage to do is we figured out a way to do a due deal on the NPL book, right? So non-performing loans, managed to give them an advance rate, managed to figure out how the cash flows would work. So that's another interesting development that we don't need to tease about, but we're actively looking into how to list non-performing loans as well. And I think that's something that I think on Esketit also is something related to that these days, right? So seems to be crowdfunding or claim platforms are moving in similar waters, trying to figure out where there is a business opportunity.
Do you want to elaborate about the NPLs and what might be the difficulties to to measure the business, to predict the cash flows and stuff? So is that something you want to maybe quickly elaborate, or maybe for the next episode?
No. I mean, I can, and hopefully by the next time we are already further there. But if you think of an NPL book, right? So a non-performing loan book and a normal performing loan book, there's not much of a big difference in terms that you're trying to predict the cash flows coming from it. The main difference is that in a performing book, you have set schedules, right? So if a loan has been taken for a year, you have usually 12 installments. And then it's easy. It follows, the cash flow follows that. If it doesn't, it becomes a non-performing loan. Now, in terms of a non-performing loan, the same way you would say, okay, the cash flow is going to be this in a certain time. And that's how we set the junior share rate. But then the question is that some of those loans will pay back in time, and they will even pay more than what is expected if you look at an aggregate book, but we're looking at individual loans. And then some will not pay anything this month, but next month they will pay double. And again, there's a month that they don't pay anything and so forth. So in NPLs, the cash flow is a little bit more unpredictable. Although on an aggregate basis, if you look at the whole book, it works. but individually speaking, it can be a little bit erratic. So one of the thoughts we've had is that we'll need to have, for example, quarterly checkups or thresholds on how much money has been collected. So, instead of having a monthly checkup for it, we'd say 3-month checkup. That if there's a threshold of X, that how much money needs to come into this loan in 3 months' time. If that is reached, then it stays as a performing, non-performing. If it's not, then it becomes a non-performing loan, and then it would be subject to buyback. So I think one of the things, the buyback is still a key feature there. That if it doesn't perform whatever asset, then it needs to be taken out by the LO. So we've tried to look at it as clear as similarly as possible to what we have today, just to be kind of not to confuse investors and to keep it simple. But yeah, so that's the main difference.
Yeah, maybe we can go also a bit more into detail once there's an official signing then happening in the next couple of weeks. So maybe on the next episode, we can pick up on this topic and maybe talk about certain mechanisms, how you want to ensure also the safety for investors with those particular companies. Let's shift to the annual report, which has been submitted by Income on August 29th, according to Estonian Company Register. Now, obviously, having a company in Estonia myself, I know the deadline is usually June 30th. But I kind of see it's like an historic issue, so to say, with Income, because also the years prior, 21 and 22, it has been submitted even in September. Can you talk maybe why it's hard for Income as a company to submit the reports within the required data timeline?
It's definitely not a planned feature to delay them. I mean, you don't want to have these notifications and other things. I mean, it's simple. We had the same issue as we had last year. So as we are currently being funded from equity investments by current shareholders, then the money that came in 2003, we were chasing them, and it's an Austrian family office, and kind of like similar that last year they said, okay, we'll deliver it in time, and the same thing this year. So we were just waiting for documents on what is the purpose of the payments for audit trail and for accounting trail. So essentially saying that these payments within 23 that came in will be converted to equity in 24, right? And it took them a little bit of while to get the signatures once again. Similar issue last year. But it is what it is. So we circulated all of those signatures. When we got them, and the accountants dared to put the payments into equity, and then we could actually submit it. So it was just a normal, and maybe next year, hopefully we don't have this delay. Maybe we learn something finally. But yeah, nothing dramatic. This was just the case there. And we finalize the accounts and have a proper documented accounting trail for everything.
When we look at the results, it's one of the positive things to highlight for sure. Equity position turned positive again towards the end of last year. Other results seem to be quite okay for this point in time, would be my judgment. You doubled the revenue, 430,000, while the loss has been almost halved, 590,000. So what's your overall view on the results? What would you like to share about, the financial situation?
Yeah, I think, I think you lifted the main things. Again, it's starting to look as we thought it would look after 2 years of operation, right? So like you mentioned, we were getting around 430,000 of revenue already from the LOs. So that doubled. We had around 220 in 22. So that's great, obviously. And also the loss part, right? So we managed to have the loss rate at the moment. So again, if this continues, we'll be absolutely where we were supposed to be. But I would again say, if this was the second year of operation, I'd be happy. Unfortunately, it's taken a bit longer. So I guess it's actually quite there where it should be if you just stretch the years a little bit forward. So hopefully this year again proves to be a bit better, and then finally getting to actual profitability and so forth. But yeah, those would be my main highlights. The same as yours. Relatively good result, all things considered.
Yeah, while you mentioned the profitability, can you share an outlook or let's say the targets, both in terms of the timeline when you forecast to reach break even, and also which kind of volume, how many assets you would need to manage to get to this point?
Sure. So I think I've mentioned before 30 million roughly as a break even point, but now this is not necessarily a break even point. It depends on how much we budget for growth, right? So we have one of them, and I think if you look at Mintos or if you look at anyone, the big question is the investor acquisition cost, right? So that's one of the key how do I say, cost items. Now the question with 30 is, do we need to continue with the same growth of new investors, or will the old pool of investors actually keep on increasing? And then to take the thought forward, will we need so many new ones, or does the number of new acquisitions scale up linearly with actually the AUM? So and then this brings the thing that actually I think that we will be break even with less than 30, but this remains to be seen. So this acquisition cost is something that plays a role there, which we kind of are trying to get our head around in the budget, but so far we've just thought, okay, let's linearly keep it up there and keep the 30 as a goal. But I think it's around that area.
And the timeline maybe towards the end of next year on a monthly basis?
Yes, correct. Yeah, let's be realistic. I mean, if we can get this year to 20, we'll be very happy. Anything over that, and then that will take us from, what did you mention, 10ish to 20ish. So again, about doubling, and then around 50% next year already, or even doubling, hopefully, depending a little bit. But let's say 50% growth will take us to 30. So by the end of 25, we should be profitable.
All right. Keep on investing then. Maybe a small side question here. Have you adjusted the commission structure for the lenders in some shape or form? Because I remember back it was between 2% and 4%, right? Of commission fee. Have you adjusted the monetization system in any way?
No, I mean it's roughly 3%, right? So it seems to be relatively in line with the other platforms as well. So we did have some early stage ones. I think already last year we raised it a little bit. We started at 2 with some, and then with the inflation and everything, considering life has gotten expensive, developing the technology, everything is much more expensive today than when we actually did it. And in that sense, I think setting up a platform like this today would cost you double what it cost us. So something good in that sense, that we got it done in time. But yeah, 3% roughly plus minus is today's the main driver for everyone.
And maybe to wrap up the annual report, maybe to quote something, the company plans to raise further additional funds in 2024 until the company's own operating streams are sufficiently profitable. It's something that you hinted at already several times in the past during this podcast. That you're planning on raising additional funds and new equity. What's the status quo in the annual report? Particularly, it was mentioned it will happen even this year. So, can you share further details?
Yeah, sure. I mean, we are consistently raising all the time, right, from existing ones. So obviously that's the commitment from our key investors, is that they keep the lights on and cover the operation. So that's the thinking today. So we are raising all the time. In terms of a bigger raise, we are discussing with few people, also some contacts from our key investors network. I guess the main thing is, once we find a anchor investor, then we can start putting out the round. So there are discussions. We are talking. We're looking. We're again revamping the deck. So this is something that's in the mind. But yeah, I mean, we haven't really launched an open fundraising at the moment.
Yeah. So is there any thoughts of doing, let's say, crowdfunding to involve your retail investor base?
Well, we have thought about it. I mean, one of the things already in contact with, we did with SeedBlink way back when, right? So the Romanian platform, which was actually quite good. And we really liked the experience was good. The proceeds were relatively good. The process was very good. So SeedBlink, worth looking into if anybody's considering of raising a small advertisement here. But yeah, so I mean, we did have an early discussion with them. They might be interested in doing a second follow up round. But again, with the same thing, we need to find a anchor investor for that follow up round as well. And I think these days maybe you can't really count on crowdfunding to bring a massive amount. I mean, it depends. It might bring a lot, it might not. So I would rather say that there could be good to have a anchor investor committed to a reasonable amount, and then supplement it with crowdfunding once again.
I think the previous round was 300,000-400,000, right?
Yeah, from SeedBlink, correct. Yeah. That was actually very good considering their size. But also the whole process went really well, and it wasn't just about the money. We tried a few others as well, maybe bigger platforms, but we did have some discussions and even some campaigns open, but they never materialized to the level that was the expectation. So SeedBlink definitely overperformed, so we were happy, and we'd probably go to them again for a follow up.
Can you share why you mentioned this would require also an anchor investor?
Well, I mean, it's a standard in equity crowdfunding, right? So essentially, it doesn't matter to which platform you go. You have an anchor investor or a key investor, and then essentially that is the entity or the party that does the due diligence, and then the crowdfunding platform kind of follows them into the investment. So the idea is there that if you have a VC or a private equity guys investing, then they do the homework, and then the crowdfunding kind of relies on that homework, that the valuation is right, metrics are right, the company actually has value and a way forward. So that's the logic.
Is there a specific volume that is required for the anchor investor?
I think it was, if I remember correctly, it was roughly 30% of the whole round needs to be taken by someone. But again, this might differ from platform to platform. But let's say you're raising $1 million, probably around 300 needs to come from the anchor. And then crowdfunding only has the limitation of how much they can raise, right? What is the offer? And then whatever follow up or joint investors to the key investor or the anchor investor come through.
All right, understood. Let's discuss board changes. Something when reviewing the company profile in the Estonian company register, it's apparent that since August 21st, you're no longer a board member, management board member. Can you talk about this decision or why this happened?
Sure. Yeah. So as I mentioned early on, I mean, I've had some quite, serious back pain for a few 2-3 years. And essentially it was just that the thinking I'll focus on getting myself in shape. So, I've been running for the last 20 years as an entrepreneur, never really focused on health and well-being. And then the last 3 years of grinding, in terms of income. And obviously then Labyrinth becoming a CEO helped me a lot with it, in terms of taking a lot of the work off my back. And then I thought that, for me to give off some responsibility more, I will just remove myself from as many boards as I can. And then the first thing is I'll get my back fixed. And then we'll see how life goes. But this was the pure logic of it. Time to focus on health and well-being sometimes. Yeah.
It's interesting because for me, from my outside perspective, and obviously this goes along with some discussions we have off camera, for me it's like when I think of Income Marketplace, you're the founder, you've been the UBO at the beginning, you're the face of the company, of the marketplace, so to say. And looking at recent years when you were stepping down from the CEO position, you're not the main shareholder anymore. You're now one of a couple of ones,
smaller ones.
Yeah, and it seems like your role is getting like significantly like it's vanishing over time, over years.
Yeah.
Do you feel like there's maybe, or I mean, if you want to discuss about it, is there any plans to exit your income venture that you started entirely, or?
No, yeah, I mean, we can discuss it. No, I don't have an idea of exiting as you know, and if an exit would happen, then it would probably be with all of the shareholders together, right? So I don't have there's not even discussions ongoing of me selling to anyone. So that's clear. But if you look at the way the world rolls is of course that as new money is needed in the company to keep the company, as I know, I always think company is kind of an individual entity in itself, and whatever is best for the company is best for the company. And then after that, you look at it. Okay, well, is this good for me? But if you need to make sure that the company survives, then you need to raise funding, right? And as you can see, of course, the shareholding has got, and it's been diluted down. So I think today I'm at perhaps 12%. So now I think I started at around 40%. So obviously, I mean, I wouldn't say that's the main motivation, but it always goes hand in hand. And I guess anybody would say, like, how much of your health, or how much of your time, or how much of your whatever are you willing to risk in order to push through? And this is why VC investors usually want the team to retain a very high stake, because in the end it's about the team. I would probably have done the same decision as I did, regardless of this equity part, because I just need to fix my back, and that's nothing else to it. And to say the good thing, of course, about the Hauptmann's, right, who are now like you said, UBO and key shareholders. The good thing, obviously, is we do have an active discussion with them on the role, and how do we return equity to me. Also, so I think their will is to keep me engaged, keep me running, and building income. But they also realize that in order for this, then there needs to be an equity increase, or some sort of a discussion over that. And we're having that discussion. So yeah, I mean, that's how life goes. And I haven't gone anywhere. I'm still supporting Lavrenti on a daily basis, dealing with the LOs and other things. And then, of course, you have the shareholder level discussions, which are different. But yeah, that's the short recap of how things have gone, right?
Mm-hmm. Yeah, that's actually the quick follow-up that I had. What is effectively changing that you're not a member of the board anymore? What does it mean on a day-to-day level?
Well, I mean, it means that, and I'm cutting down certain things in Finland as well. I've had some historical, board positions. I've helped my friends with their startups and everything. So I really took the time to think, like, what are the responsibilities that I really want to cut off, right? So in terms of a board position, you do have the extra responsibility, like, let's say, the annual report. Let's say, board meetings, let's say, organizing whatever agreements. So there is a certain amount of work that comes with every position, and then now this was cut. So what I'm doing today in income is obviously discussion with the LOs, as I did already before, coordinating the external lawyers, sorry. So law firms for the agreements that we're doing, and then helping out Lavrenti with whatever there is. So I'm pretty much nothing in terms of that has changed, but I have been able to cut off these extra responsibilities of board members and some advisory duties and other things that I've managed to pile myself with. So now it's more of a yoga instead of advising, but we will see where I get with it.
All right. Thanks for sharing those
sure
thoughts. Yeah, and maybe to wrap up, I took one last note, which was regarding changes for the early buyback feature. There was an announcement coming from Income in July. It was the 12th. yeah, can you talk about what those changes entail and why you applied them right now in the summer?
Sure. Essentially, the big difference is that it was before a sort of a, how would I say, a guarantee. Well, you can't use the word guarantee. Nothing is guaranteed. So, let's always be clear. Nothing is 100% zero risk. I mean, that's good to always come. And if anybody else says something else, then, do your own research, as they say. But there was this sort of an element where the LO would always buy back at a certain date, and for a multitude of reasons, this went a little bit difficult. Also, I guess from the LO side, it created a bit of a cash flow pressure in there, even if they could mitigate it. So we tweaked it around. We did a lot of work with the lawyers so that it's compliant in every way and works better. And the main difference is that you would before when they would list, they had a date when they would actually buy back. Now it's an optional buyback date for them as well. So if something else happens, they are not basically they don't have a legal obligation as such to fulfill it. They're doing their best to fulfill it, right? So if there are cash flow issues that they have, then for example in that case they might be pushing it forward a little bit. They might be and executing it later. So it's a bit more on flexibility. But again, all of those LOs that are utilizing it understand that if you start playing around with it, this should be like a last moment thing. I mean, we were very clear with them also that you can start playing around with them, but the investors will not probably look at it very positively. It's essentially saying that you have cash flow problems if you don't, if you don't use it, and that's if that's the message you want to send, then feel free. But yeah, I mean that was the main difference. It's a little bit more flexible for the LOs, a little bit forgiving for them as well, but at the same time, yeah, fully compliant with everything that we've discussed with the lawyers and others. So yeah, we found a balance there, and I'm happy we didn't need to scrap the product. We actually found a good way of working for all parties.
All right. Thanks for clarifying this as well. I think then we can call it a day and wrap up episode number 9. Anything left to say? Do you feel like?
No, I think we're going in the right direction, and we'll see on the next podcast.
Yeah, hopefully then episode number 10 we can go a bit more into detail about the new lenders, the new lending companies, and discuss their profile. Otherwise, we make something up and come up with a different topic and different idea. But yeah,
by next podcast, we will have new lenders, 100%.
Okay, we take your word for it. Let's see. Are you willing to open up? How do you call this? A small gamble. If you don't.
If we don't, I'll buy you a beer next time we see.
Let's come up with something for the investors that are listening to our podcast.
Okay. Let's figure it out.
We think about an additional bonus code to facilitate investments.
There's no one.
All right, Kimmo, thank you very much for your time, for all those answers. Good to see you back after the summer break. Wish you well with continuous recovery in regards to your back pain. Don't deadlift so heavy would be my advice.
No.
And I'll see you then in the next episode.
All right. Thanks, Denny.
Bye-bye.
See you soon.